What's happening, YouTube family? It's your boy here, Honey K Steez, and look, I've been doing a lot of research. I've been talking to people, and I'm just trying to put everything together, right? And I've noticed the biggest thing with becoming a professional, consistently profitable trader is understanding risk management, right? And that is a big deal. A lot of people overlook it. A lot of people don't really put significance on it. And so I did this quick video for you guys because I wanted to showcase you guys. I wanted to educate you on risk management, which is a very, very important thing to actually implement and understand in your trading so you can become that actual trader instead of just gambling in the markets, guys. So this video is not going to be too long, but it's going to be packed with information. I hope you get some sauce. Get your notebook out, stop playing yourself, and let's get right to it.
Just looking at his profit loss.
It shouldn't be too long, but it's going to be packed with good information. I also have a PDF for you guys, a free PDF that I will be sending to you guys right after. So you can watch this, take notes, and then you'll get that PDF guide. It's just a 5-step risk management, 5-step risk management PDF. So feel free to check that out when I drop it. So we're going to start out, and I got a couple of pieces to hit on today. And we're going to be talking about risk management, like I said. So just to get a better idea, so risk management is like the biggest thing, in my opinion, to trading and understanding that you can make money even though you're losing money. You know what I mean? So you can end up profiting at the end of the week with losses if you do this properly. And that's what risk management is about. And so we're going to go to the definition of risk management, which is over here to the left on the chart. Once my mouse stops tripping. Okay, here it is. What is risk management? Process of identifying, assessing, and controlling threats to an organization's capital and earnings. So the organization is you, your account, your money. That's what risk management is. It's the process of identifying, assessing, and controlling those threats to your account. And so basically, you guys got to start thinking bigger in terms of what did my account look like? Because right now, your account might be $10. Your account might be $100. But what about a $500,000 account? Now, for some reason, risk management becomes a lot different. And you have to get rid of that mindset. You have to really move into the space where you understand that by managing a small amount of money, you're in fact learning how to manage money. You have to get rid of the idea of how much money it is and understand that it's just money. And if you can manage any type of money, small amounts, big amounts, then you can manage it all. You know what I mean? So you have to get rid of that idea that, a small account doesn't need as much management as a big account. Because in all reality, they're all the same. It's just an extra couple of zeros or whatever. You know what I mean? So that's what the definition of risk management is. And I feel like we need to start with that because that's going to help you guys understand what this means as far as trading. And if you really want to make money in the long run, you got to learn this. You got to put the time in, you got to learn. So risk management. Okay. Now we're going to move over to risk to reward. So before we do that, I just want you guys to understand that the risk management habits you perform and you continue to build are going to help you in the long run. So like this week we called out trades. Some of them hit stop loss. Great. With the right risk management, you don't have to worry about, okay, what if this trade goes right or goes wrong? What will happen to my account? That's a big no-no. That means you're not aware of your risk. And that's the biggest thing for risk management. Understanding your risk, identifying your risk. You know what I mean? So before you take the trade, you got to identify your risk. Okay? So we're going to move over to risk to reward because that's a big part of risk management. So risk to reward, I have 3 examples here and how they look and what they will look like. This is what I'm using TradingView. So a lot of traders use TradingView. It's very useful, very intuitive. So risk to reward usually expressed with a number colon another number. So in this case scenario right here, we've got a 1, 2, 3. which means we're risking 1 to get 3. Simple, right? And so that's how it's expressed, 1:3. And so anytime you see this on a chart and you're saying, oh, it says 3.17. So to be exact, it's 1 to 3.17. But we're just going to round down for the sake of this example. So to the right of that is going to be your 2 to 1. Okay, so your 2 to 1's right here. I'm going to do a different color. Don't mind my drawing skills. I'm using the mouse. And so that is going to be expressed 1:2. So that's a 2 to 1. And what that is literally what it is. You're risking 1 to get 2. And then here's a 3 to 1. Here's a 1 to 1. Okay. So what a 1-1 is how it said, 1:1. You risk 1 to get 1. Now, the reason why I gave you all 3 of these is you have to understand that this is a form of risk management. This is what you would do when you set your trade up for that trade before you take the trade. You know how much you're going to be risking and how much you're going to be making. So how much are you willing to risk to make this certain amount? So by understanding that you need to integrate this into your trading plan is how you're going to be able to actually implement this into your trading. Because a lot of different things go into play when you're taking trades, because some trades do follow certain risk management parameters. But as you get better, you can learn to be more dynamic, as they say, with your trading. But right now, as you're starting out, and I'm just starting out too, so I ain't that far ahead of y'all for real. Just be mad robotic. You really gotta say, okay, I'm taking 1 to 3s. I'm doing 1 to 2s. This is what my trading plan consists of. And that's another great video or that we can go into and maybe talk about another time. But risk to reward is a big part of your trading plan, so I'm kind of putting them together a little bit. So understanding that these are the risk to rewards, and you need to know which one you need to use. And I would just stick with 1 for the time being until you start to get better. Because imagine if we did 1 to 3s, right? And so we're going to do a scenario where, you do 10 trades, right? This is how you got to look at it. 10 trades, you're going to take 6 losses, okay? Now, what we're going to do real quick is we're going to do 1 to 3, risk to reward, right? 1 to 3 risk to reward. We're risking 1 to get 3. And what we're risking is $100, just so you guys can have something to refer to. I really don't like adding money into the equation because now your brain likes to compare different dollar amounts, and you have to understand that money is just numbers. I'm just giving this so you guys can have a better idea. So better yet, what we're gonna do? We're gonna do 1,000, just so it can start to resonate with you and move you into that space of understanding that if you can manage any amount, a small amount, you can manage any amount. So anyway, risking $1,000, right? That's what we're risking. So we're risking 1,000 to get 3,000. That's it. All right. So we're going to take 6 losses, guys. So you do the math. 6 times 1,000 is going to give you 6,000, right? Negative 6,000 in losses. We're not going to do negative. We're just going to do 6,000 in losses. All right. But now our wins, we're going to have 4 wins. Now here's the difference. Every time we risk 1, we aim to get 3. So when we win, we get 3, right? So 3 times 4, because 3,000 in this case scenario, 3,000 times 4 is what? So we're going to do 4 times 3,000. Because that's what we get per trade. In the losses, we lose 1,000 per trade. So 6 losses times 1,000, 6,000. In the wins, we make 3,000 per win. So 4 times 3,000. And you get $12,000. Right? So look at that. Look at the magic there. This is bugging out. Look at the magic there, guys. Total profit gonna be $6,000. That's it. Does that make sense? Total profit, $6,000. This is following risk management protocols. This is following those same rules. And it's crazy how you can lose. What's the win rate on this, guys? So let's say I took 10 trades. This is where you have to understand that risk management is very important, because the win rate on this is literally under 50%. And that is going to be 40%. That's it. 40% win rate. So you lost more than you won. You lost way more than you won. But when you won 3 times as much. And this is risk management at its finest. You can lose a lot of trades. You can win a few trades, still make good money. So I wanted to share that real quick. Now we're going to move on to integrating it into your plan, embedding RM to your trading plan, risk management to your trading plan. 1, you need to know what you're willing to risk per trade, per day, per week. So this is where the plan comes in. You can't just see a bunch of trades and just take them. Even if you are doing quote unquote good risk management, like, oh, I'm only risking, 1% on a trade, but you get 5 trades, now you're risking 5%. You see, you have to know what you're going to risk that day, but also you need to know what your max risk is. What your maximum risk is. You get what I'm saying? And you need to understand that. And it has to be written out. You have to be like, okay, I'm gonna risk 2% this week. So if I take a trade this week, I need to understand that, okay, I need to be risking 0.5%. Or if I do trade 1%, that means I only can take 2 trades. You see how that is? And so you have to kind of figure that out. That's something you have to work with. Just understand that as you're working it and as you're figuring that out, if you have good risk management overall anyway, this will fix itself. But at the same time, you gotta figure it out. You know what I'm saying? So you gotta figure it out at the same time you're trading. So when you're trading, you don't need to be over risking. Like, I remember I was risking like 0.5% a lot of the times in my trades, because understanding how much I want to risk per week haven't really defined it yet at the moment. So for me, I risk small and I just let the trades come in, and then eventually I up my risk according to what I'm getting for the beginning of the week towards the end of the week. You get what I'm saying? So that's number 1. Number 2, define your risk to reward. We just talked about risk to reward. What you're going to do is define how much you're willing to risk in exchange for how much you're willing to gain. And when you have a higher risk to reward, you're able to lose more trades and still make money. Remember that. You have to get this stuck in your head, because once you do, you're not going to be worrying about, oh, how many times does he win? How many times he loses? You look at how many trades are hitting take profit. What's the risk to reward parameters? How many times am I trading? How many times am I putting my money at risk, and how much? So it's a system. You got to start building it, and it integrates into your trading plan. This is part of it. You know what I mean? So the third thing is don't fold. Got to be consistent, and you got to sit here and tweak your trading plan and your risk management according to what's going on. And so as you get better, you're going to be more adaptive. You're going to see different things in the market and say, okay, I need to do less risk. You need to be saving your data. And the reason for that is so you can go back and say, okay, it looks like during this time I struggle a little bit with trading during this time of the year, or maybe just lately I haven't been feeling that good. I need to drop my risk down, or maybe I don't need to trade. You gotta start monitoring yourself. I mean, how serious do you want this? You gotta ask yourself that. Do you really want to tap in? Do you really want to make money trading, or do you want to just, what do you want to do? You really got to ask yourself that, because if you're serious about that, you're gonna really take this risk management serious as well, because this is a big deal. If you can't manage risk, you really can't manage money, and if you're not managing money, you're not making money. It's just coming and going. So you got to maintain your cash flow. You got to maintain your capital. You got to secure and protect the money you have already. You can't just be throwing it out. So risk management is very important. Know what you're willing to risk per trade, per day, per week. Know what you're willing to risk. How much cash you're willing to lose this week in order to see how much you can make. You gotta know what that is. Define your risk to reward all the time. You should never be taking trades and not knowing what your risk to reward is or how much you're risking. If I call a trade out and I say, how much is everyone risking? You should know. Oh, I'm risking 1%. I'm risking 0.5% right now. I'm risking this, that. Talk to me in percentages, because in percentages, you're able to scale that skill. With money, you can't. Oh, I'm risking $50. Okay, well, how big is your account? $100. So you're risking 50%. You see how that doesn't work. Now, I'm not saying for those who other have small accounts, I'm not saying that you need to be doing 2% on on a $100 account. I'm just saying that's a skill you should acquire, because essentially you will be needing that skill when you get into that place where you're managing a $500,000, 500,000, $1 million accounts. But just really take this, take notes on it. Anything else that I can share with you guys on risk management? I think I did pretty good with it. A little shorter than I thought it would be, but at the same time, I feel like it was packed. I planned it out prior. So on top of that, I do have a 5-step risk management process PDF for you guys. So I'm going to drop that below. And then if you have any questions, any comments, if you want to just reach out, like I said all the time, hit me up. Let's talk. Let's chop it up. If there's some value I can offer to you, please let me know. And be safe, everybody. Let's have a great weekend.